Hello everyone. Welcome to Fisk Capital. Today we are discussing Warren Buffett's letter of year 1962. As you can see in recent developments in India in last 6 months, we have seen the first bear market in last 5 years. There was some bear run for a few weeks in 2022, but we haven't seen such a fall in many years since COVID. And that's why many new investors were quite afraid on what is happening, and many have booked the losses and took out their capital. So this episode is very important for all of them on how to beat the market in bear markets, because 1962 was a year where Buffett was also facing a bear market, and whether we should bother about the bear market and what we should understand while analyzing our performance during the bear market is all we are going to discuss today. As usual, in starting, Buffett has given some commentary on the market. Again, he mentioned that it's not about short-term prediction, but he has some long-term focus, and that's where he is assuming some things may happen in the next 10 years, and they could be in different short-term phases. So Buffett always said that short-term movements, prediction of short-term movement is futile because you don't know what a person has in mind. And so, for example, like if we look at Indian economy, nothing big has happened which was a big worry or concern in last 1 year or last 6 months. Everything was on the expected lines, but there were a lot of people who were sitting on the profits, who had made a lot of profits in the 5 year, and someday they had to sell it. So once somebody big has started selling primarily the FIIs, people followed, and it become a market crash of 20-25%. So that's what he also says, that in short term you don't know when is going to be a bear market or when is going to be a bull market. But if you look at 10 years horizon, there are years when there will be a bear market with 20 to 25% decline. Then there are bull market with 20 to 25% gains. And then if you look at the long-term Dow returns, he assumed that it should be between 5 to 7% compounded annually through dividend and growth. So Buffett's goal was to beat the Dow by 10%. That means he was expecting a return of 15 to 17% across these 10 years. So he said that a great year isn't just about absolute gains, it is about outperforming market over time. So you shouldn't bother about a 1 year return that market has gone down 20%. My portfolio is also down 20%, why I'm not 10-20% up, because in that particular phase, you may be in an accumulation phase, and it is better for you that you can get the securities at a lower prices. Market was down in 1962. So what Buffett has to say about that particular part? In this year 1962, the Dow was plummeted by 21.7%, but Buffett partnership only declined by 7.5%, which was 14.2 percentage point gain. So this is where we have to understand that it's not only about an absolute profit. Even if you are declining lower than the market, that also means that you are outperforming the market, and that means you are at a better position in your portfolio as compared to the broader market. So that's something which a lot of people misses when they analyze the market, that how low I am going as compared to the broader market. His focus was more about long term, and he always said that for any short term gains or losses, be it 6 months, 1 year, you shouldn't do a lot of over analysis. If in 5 year, 10 year period you are not getting the desired return, then you should be worried. But in 1 to 2 years, if your securities are not performing as expected, then you shouldn't be bothered about it much if you have done a proper analysis. It's not about avoiding losses, but it is about losing less when market crash and compounding gains over time. If you are more interested in understanding what we mean by losing less and compounding returns, so you can watch our last episode of it. Gave some examples of a real comparison with mutual funds and Dow against his partnerships, and he mentioned that he was able to outperform not just because he was doing better when market was up, but more importantly, he was losing less when market was down. Coming to the next part on mutual fund versus Buffett, again, as I said, last year also we discussed, this year also we discussed the same part, and he mentioned that Dow was down minus 21%, and many other mutual fund was down even more. Minus 23% makes up to set investor trust, then investors stock fund was minus 25, and there were few growth funds which were even lower, minus 32%. So you can see that in down market, growth stocks goes down significantly more than the value stocks. This is also what we are seeing even now in today's time, that many big stocks where we are having a very high PEPB because of expected growth of 50%, 100%, 200% in the coming years, they have gone down sharply to 50%, 40%, whereas value stocks have gone down only 15 to 20% in the broader market in India. Now, he was explaining about the partner equity, that if somebody was regularly withdrawing, then what should be his return, and somebody who is not withdrawing, what should be his return. So we have to understand it from the point of view of systematic withdrawal plans or any income generating portfolio. that how they perform in the declining market. So as you can see that if somebody was not taking out money, their return would have been only minus 0.75%. But if somebody was withdrawing 6% annually, his annual return this year would have been minus 10.5%. So this means that in declining market, SWPs and all these kind of withdrawal schemes, it gets into a vicious cycle. That's why I always suggest that only start withdrawing at a rate where you can see that in the long run, the average return of the portfolio is obviously going to outperform the withdrawal rate. So if you are thinking that 12% should be the expected return across 5 years, 10 years horizon, then you can take a withdrawal part of 2%, 5% kind of. So that's up to you. So that's the only part we have to understand from the impact on partner equity. Now, in the second ladder, mostly the discussion was around his partnership and how it will structure and all those things. But there was one part which was very important to understand, that the global portfolio went down only minus 16.8%. So there was an upward correction in the market. But his upward correction was much higher. From being in losses, Buffett's portfolio came 5.5% positive. So the outperformance from 14 percentage point has increased to 22 percentage point. And the main reason why this happened was that he was able to take out the profits of Dempster company. He was heavily invested in Dempster's Mill, if you remember, in last few letters. And the benefit came out because the liabilities of the company went down from 2.315 million to $250,000. And this happens in a lot of stock. You will see that the company may not always have to do a lot on the revenue side by increasing income and increasing sales and business. Even with cost efficiency, reducing liabilities, they can show you better balance sheet and improve their financial strength as well as the stock prices. So you should also look for this kind of things when you make an investment. That what is their liability structure and what can happen if they come down, and whether the company is really interested in reducing their leverage. So that was the part, but here also he has made a question that this outperformance is unusual and not going to repeat frequently. So obviously you can see that it was one stock which gave better return, and that also not because the economy is growing and their business is growing, but more because of the reduction in the liability. So obviously such kind of situations happening again and again is very rare, and that's why we can't expect this kind of outperformance being taken place regularly and frequently. So this is one of the key aspects we have to understand, like what is the attribution for the higher return. Many times I saw people in the last 5 years attributing their alpha, their exceeding performance from market to very random events, very random logic and very random chart strategies and all those things. But that's why many times when they see this kind of fall, or even things doesn't work out for them, then they start realizing that their attribution was wrong, and that's why they were not doing the right strategy. It was a random walk of stock market which has helped them in getting those kind of returns. So that's why always try to analyze not only on underperformance, that why you are down, but also on outperformance, whether why you are up, and how you can continue that. And if not, then what is the best thing you can expect? So as he says that future years may not always outperform that, but his focus is always on the long-term gains, and there he doesn't have any change in his current strategy. So that's all we had to discuss about Buffett later in this episode. If you have any doubt or concern, you can write them in the comment section. And if you like more videos like this, then do subscribe to our channel.
क्या आप भी स्टॉक मार्केट में रेगुलर लॉसेस से परेशान हो चुके हैं? क्या आप गिरते हुए मार्केट में ये समझ नहीं पाते कि आपके शेयर को रखना चाहिए होल्ड या सेल कर देना चाहिए? अगर आपके पास ये सारी प्रॉब्लम्स आ रही है तो आप अकेले नहीं हैं। कई सारे लोग इन्वेस्टमेंट के मामले में बिना रिसर्च के किसी से भी सुनी सुनाई बातों पर इन्वेस्ट कर देते हैं। उसके बाद जब वो शेयर गिरते हैं तो उन्हें समझ में नहीं आता कि इसे सेल करे या होल्ड करे या और बाय करे, और ऐसे में वो शेयर सेल करके लॉसेस बुक करते हैं, जिससे उन्हें लॉसेस होते हैं, स्ट्रेस होता है और टाइम की बर्बादी होती है। फिस्क कैपिटल में हम आपके फाइनेंशियल गोल्स को समझकर आपके लिए कस्टमाइज्ड सॉल्यूशंस बताते हैं, जो आपके गोल्स के हिसाब से आपको सही एवेन्यूज में इन्वेस्टमेंट के लिए हेल्प करता है। और क्योंकि आप आपके फाइनेंशियल गोल्स के हिसाब से इन्वेस्ट करते हैं, तो आप शॉर्ट टर्म की ऊपर नीचे की गिरावट को भूलकर लॉन्ग टर्म के हिसाब से अपने इन्वेस्टमेंट्स में बने रहते हैं। तो अगर आप भी किसी ऐसे ही सॉल्यूशन की चाह रखते हैं और आप फाइनेंशियल प्लानिंग में हेल्प चाहते हैं, तो अभी हमें नीचे दिए नंबर पर व्हाट्सएप करें या फिर हमारी नीचे दिए हुए लिंक पर जाकर 1-on-1 फ्री कंसल्टेशन कॉल बुक करें।